Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place to be informed, be amused, but never be misled. And please don't be jealous out there because I happen to be wearing another Hoot Loot Hoot Coin t-shirt. We have a whole variety for you today, including this hoodie, which I have claimed as mine. But we'll be having more of these coming up ahead. Also, I showed you last time these guys, in case you want to make a point with someone that needs to be made a point of. They're also keychains too, by the way. Today's show is going to be called Economic Mismanagement Continues for everyone but the politicians. And it's going to be about the Federal Reserve, which is why I'm sitting in front of the building of the Federal Reserve. We're going to once again reiterate the promotions that we have going on. And silver and precious metals are going to be the place to be. And we're going to tell you exactly why. The chart that I'm showing you right now that's behind me, the chart that's up in the chart that's showing is going to tell you exactly why. What you're looking at right here is the CPI, or the CPI minus the 10-year interest rate at the time. Okay, so this is a time series. So the CPI is higher than interest rates, which should not occur. Interest rates should compensate you for inflation and give you a slight return, like +2. So if, for example, interest rates really were 1.5, which they are right now in the 10-year, you should be getting, 3.5. You're not. You're getting 1.5. Inflation is really running about 8-10%, so you really should be getting about 10 to 12. So you're lending money at 2 and getting, you're basically getting 2 for what's costing you 12. Oh, good deal. We have now, the thing that keeps that from happening and will keep it from happening is a gold standard or hard metal standard. I think we're maybe coming up on that. Bill Murphy was on a couple of weeks ago. He is the king of precious metals as far as I'm concerned. And we're offering his magazine, Le Metropole, for lucky drawing winners that are coming up around the 4th of July, Independence Day, wave the flag and all that kind of good stuff. And we're going to be doing just that. Also, he has an organization called GATA, GATA.org, where you can get free information. All you got to do is donate. If you donate, we'll match it. Okay? And that will reduce the cost of your Le Metropole, which is about this thick every day. I had it here. I'll show it to you next time we're on the air so you can see just how big it is. Okay, so today we're going to talk about negative real interest rates. And please like and subscribe over here, wherever the hell the button is. And don't miss a thing. This is incredible times going on. And we're going to be right back with the charts. Okay, this is the chart of the day right here. This is from the Federal Reserve. What this measures, again, I said this in the opening, was the CPI, the Consumer Price Index, minus the 10-year Treasury at, constant date of maturity. So in other words, today, for 1.5%, you can get 10 years for 1.5% from the U.S. government. Oh, whoopee! That means you only lose 8% a year. Oh, God, what a great deal. Where can I sign up for that? Or better yet, you can sign up for the 30, which is trading at 2.1. That's what this whole thing is about. But there is some good news in it. Now, good news is this. Every time. Now, look at the bottom of this chart right here where you have the two spikes. One down in the mid-70s, late 70s. Guess what happened? Silver, gold, oil went ballistic. Okay, and we're seeing it right now. Now, you may not be able to see it completely clearly, but there's a spike down on the Friday that just occurred, literally, that just occurred, massacred everything in sight, and it is now within range of those bottoms. Now, the thing that also makes it important is CPI is overstated these days, so it belongs lower. If anything, what this is telling you is the circumstances are right to buy gold and silver, okay? This has never failed. Now, it may, things are about odds. Remember, things are about odds. They're always about odds. 99% can still fail, but this is a good one. All right, here's gold. We're just talking about it. Now, gold does look bad, and I've got to tell you, the chart looks really bad. Look at that just absolute bludgeoning that gold got on Friday and Thursday. And that was after the Fed came out and said nothing. 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 That's pretty much what Jay Powell has to say when he says nothing. He just goes, blah, 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 nothing. And occasionally a little bit of a mistruth or spinning the truth or whatever. 2% inflation, transitory. You don't have to worry about it. Transitory means temporary, by the way. So what he's saying is that we're going to have 2% inflation. It may go up to 3, 4, and then go back down to 2 as soon as everybody is out being hysterical. They're done with it. That's not going to happen, Jay. Okay? What's going to happen is we're going to start see, those spikes that you saw at the very beginning on the first chart, like here, like I showed you, those spikes occurred during predecessors of yours. One named Arthur Burns, and it wasn't until Paul Volcker came along and rates went way the hell up, and you can see them going up around 1982, that the back of inflation was broken. And notice how much above inflation interest rates had to go to do that. So when you start getting rates below inflation, you are creating the water, the cauldron is going blah, 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 and it's about to explode. So be careful. Why don't you study your history books while you're at it? Now you don't have time. All right, so gold didn't do very well. I thought it might hold above the 50% retracement. It didn't do well. I'm still not entirely bearish yet. We'll see what Monday brings, but there is absolutely no reason that gold should go down here except one. The one reason gold should go down is if there's going to really be deflation and really be a depression, then gold should go down. I don't think either of those are going to occur, and I'm going to show you why in a minute. But under those circumstances, yes, gold could go down in an illiquidity situation like in 2008 temporarily, okay? Silver also had a bad down day, but not that bad. I mean, it's still above that dotted rising trend line that you see. And I still would not get too negative on silver yet. It's in limited supply. Dollars are in unlimited supply. They keep talking about more stimulus checks. Like I promised my doctor I wouldn't do that this morning, the shrink. God, I promised him this morning at the session. I said, Doctor, Dr. Melfkowitz, I promised this morning when they say the word, I won't get all nutty about it. Oh well, medication's not working, doc. Okay, let's keep going here to Bitcoin. Bitcoin, one of the canaries in the coal mine. I've had it front and center. Now it's starting to tarnish a little bit, isn't it? People are asking questions. If you want to ask yourself some very important questions, see Bitcoin Bites Back. It's one of our shows about 2 weeks ago. It is a massively loved show, and no one yet can tell me Bitcoin's real after watching that show, and no one can tell me it wasn't born in the USA. It was, and watch the show and you'll know exactly why. Tesla, another canary in the coal mine by the Barnum Bailey of the 21st century on steroids, Elon Musk. Although I must say that this stock might be breaking up. What's weird is that the kind of things that I talked about before, the NASDAQ breaking down has absolutely reversed. Everything is reversed. I don't know why. I'm going to try to explain why, but I'm also going to say that this set of circumstances is conducive to this, okay? Now, Tesla looks like it might actually be bottoming here. I don't know. I could say it could go either way. We'll just say it could go either way. Elon Musk is notorious for under-promising and over-delivering, or over-promising and under-delivering. There's not going to be a man on the moon. There's not going to be a man on Mars. There's not going to be any of that, Elon. Come on. And unless you want your first initial to be F, F Elon Musk, I would kind of like stick to the truth. Dow Jones Industrial Average, look at that. Now, who would have thought it would have broken down here? Not me, even though I've thought it for about 6 months. But it finally broke down out of its ascending wedge, and it looks like it had a really crummy day last couple days, and it's really broken down fairly substantially above its rising bottoms line. That's something to look at, and that's something that we're seeing all over the place, except NASDAQ and gold. It's really weird. All right. NASDAQ 100. Okay, time for me to eat crow. We didn't get crow this week again. We'll have to do it next week. Crow is illegal in this part of the country, and they don't even sell frozen or canned or anything. So believe me, I will keep that promise. It's still coming, but it's just not coming today. All right, so anyway, NASDAQ has made a new high slightly. the NASDAQ 100, partly because of these dramatically lower interest rates. You know, the 10-year has gone from 1.7 to 1.5. Whoa! Now the NASDAQ should rally another 10,000 points. The S&P 500 also looks like it's breaking down. It's right, it has just broken down by 1 day. And we said, the other day, or ominous, and here we go. This one's got all the big cap stocks in it, 500 of them. And the NASDAQ 100 carries a lot of weight, so does the Dow. This is kind of a mixture of the Dow and the NASDAQ 100, but it's 500 stocks, and they are now starting to turn down. The S&P Small Cap Index, same thing. It was holding up there. It actually made a new high last week, and we wondered about that. But now it's starting to break down, and it may start actually going into a downtrend. It needs to make another lower low and a lower high, and it's in a firm downtrend with not much support all the way down. So this thing could go down in a hurry. Dow Jones Transportations have been surprising us all the way on up, and now are surprising us all the way on down. The flag looked like a bull flag to me. I would have called it a bull flag, but then people say I'm full of bull, so I like to just call everything by its name, bull. The breakdown from the bullish, it actually was a bullish flag. The breakdown is not good, and it is across the board. What looks like it's going on right now, which is beyond nothing I've ever seen. It looks like we're having not like a V recovery, which people talk about, but an A top, which never happens. I've never seen it. Basically tops take a while, they're processed, but all of a sudden everything's gone like that. So we're going to show you some of those coming up. The US dollar, who would have thought this? The dollar, on Wednesday we talked about the dollar looking kind of okay, but it just all of a sudden just spiked. Why? Sometimes the dollar is considered a currency of safety, that you go to the dollar, when there's world trouble going on. But when they're printing it faster than the printers can be made, they can't make printers fast enough to print all the dollars fast enough to get them out there for the stimulus that I never get. And I will never get, I'm sure. But look at this dollar. The dollar's almost back to where it was a couple months ago. So this is very strange. All right. CRB also has taken a little breather. And the CRB is important here, not so much of the breather. It's just a small breather. It's due. It's entitled to have a breather. It doesn't go up every straight day. There are different commodities go up on different straight days. Some are now weakening, some are not. But in general, we are starting to see a weakening of most commodities. I'll show you in a second. The Agriculture Fund, I've cited this one as a shortage of food possibility. And this one is broken down too. You can see in the red box on the right. Again, I'm not gonna say that this is the beginning of a new, long trend. This could just be a corrective trend toward that last 1 year, and it'll go down a third of the way or something like that, and base, and then come back up. I just don't know. But this does not. I do not see the signs of the kinds of things that would lead me to believe that food prices are going down. There's not, food is actually in some short supply in some areas. It's not in short supply, period, but you can still go to a soup kitchen, but I'm telling you, it is not as plentiful as it once was. Base metals also broken down. Now, a lot of these, copper's broken down. I'm going to show you that in a minute. But a lot of these, tin and and nickel and lead and all that other kind of stuff, these are all starting to now come apart. Now, what may be happening, and you have to understand this may be just a consolidation, a temporary pause in a bull market. So I would not get too vexed about this, but the people that are saying inflation is transitory, they look at this and they go, see, I told you so. I told you so. It's transitory. It's going to go right away. We can print as much money as we want, and it's going to go right away. Wrong. Okay. Copper miners, same thing. Look at this. These guys really took a big hammer the other day. So there is a pause. Either one of two things occurred. Either people got over exuberant on the way up, which is possible. That's why we say take your money off the table before the table takes your money off of you. But on the other hand, I don't believe that yet it has given enough evidence that it's heading all the way down. Now, if we are in a hyperinflationary depression or about to enter one, watch this go way the hell down. That's going to be one of the signs that we're in it. We'll have other signs before that, but right now I'd be very careful about that, and especially interest rates as they may affect you, and and all those other things. Hyperinflationary depression is the worst. I've seen recessions with inflation. I've seen hyperinflations. Well, hyperinflations are pretty bad. They lead to dictators and things like that. So I guess I should say that. But hyperinflation, it's never good. And you add, depression on top of it, or massive recession, you're really talking some really bad news for people. Lumber has dropped by 50% from its peak. What this looks like to me is not that it was in a bull market that's going to continue. It might, but it doesn't look like it right now. What it looks like it right now is that it just went parabolic. People were desperate to get amounts of lumber because their homes were unfinished and they needed, 2 more planks, or they couldn't finish the home and it would be undone. So they went and paid anything for the 2 planks. And that's what I think is gone on with a lot of the commodities, is that projects that required those as inputs ended up being in short supply right as the project was finishing. And that's my guess right now. So we'll find out more later on. Crude oil has continued to go up, and that's been one of the things that pulls inflation higher. Crude oil is now above 71, and this is the West Texas Intermediate. Shale oil, where are you? Can't hear you. Yeah, shale oil I don't think is doing so good. One of the reasons is they borrowed too much money and they're having to service their debt. Another is that they have to open and shut and open and shut and open and close and open and shut. A shale well typically stays open 18 months. Okay, that's it. And if you have some kind of supply or price issue in the interim, you have to shut it and reopen it. A regular conventional crude oil well might last 30 years or more, and it will produce more the next year, and it will be like a bell curve, and it'll produce a peak and it'll kind of come off. Even though now secondary capture like steam and all that, we can get more oil out of the ground than we used to be able to get out of a certain size field. That includes fracking. Fracking, for anyone who doesn't know, is the process of using chemicals to combine small pools of oil into a larger pool, which then becomes drillable. That's fracking, and that's what all the hoopla is about. I'm not expressing a plus or minus on it. I'm just saying that's what it means. Unleaded gasoline always goes up. If people don't drive more, they'll tax them more. That's all there is to it. This is untaxed, by the way. I just showed you untaxed. That's what it goes for at the CME, not at the pumps in California, or 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 the pumps in California. The places where you pay $6 a gallon. Okay, so this is big oil right here. Now, who did so well on the inventory gain? They had oil worth, I don't know, 20, 30. At one point, it was worth negative oil in the ground, because you had to pay people to store your oil on a ship, and practically all of the seas were filled with oil tankers. Well, they've worked that off finally, and it's becoming more expensive to drill for oil, even though you see again on the last day, the demand or something triggered the market into believing demand is gone, and a lot of things took a fall. I don't know that one day will be accurate. We'll see. We're just going to have to see. Real estate also fell a little bit. It continues to be not in a bubble. I continue to insist it's not in a bubble, although it would have broken that curved parabolic line. Real estate rents are going up. There's no more land. There's lots more dollars. There's no place to build. There's zoning restrictions. There's vaccines and masks and regulations, and they keep homes from being built. If there were going to be 1 million homes built, 50 years ago, that number would probably be 1,000 today because they couldn't meet the regulations. So there you go. I'm just kidding about that, by the way. It could be 2,000. Might be 2,200. I don't know. Treasury inflation protected securities. These are called TIPS. These are bonds which rally when expectations of inflation rally. So here's another really good sign that inflation expectations dropped. Now that doesn't mean Okay, I want you to understand that does not mean just because the inflation expectations dropped, we're going to have lower inflation. Okay, all it means is what the market was willing to incorporate into the security price was that amount of inflation that it expected. I expect a whole hell of a lot more than the average person buying this, but that's what makes a market. A market is a difference of opinions and brought together into a single price. My opinion would be different. Doesn't mean it's right, doesn't mean it's wrong. Probably wrong because I'm wrong most of the time. Anyway, but the thing is, an efficient market is not right. An efficient market is just wrong plus as wrong as often as it's wrong minus. That's what makes it efficient. Not that it predicts stock prices well or that it knows where they're going to go. It just incorporates all the information in an unbiased fashion. So, once an efficient market is as often too high as too low. That makes it efficient. That's all there is to it. You can still make money in the market, believe it or not, because the same professors who wrote that theory, I happen to know, started a hedge fund, and they didn't do too well, unfortunately. Actually, never mind. 3-month Treasury bills. Now, this is also interesting. I never show these. I showed these today because the 3-month bills actually went negative a few months ago. That's where the red is. And look at where they are now, 20 basis points. Now, the Fed funds rate is 0 to 0.25. These have gone above it. Now, the Fed is telling us, or they are claiming, but not putting their hands on a Bible, without doing that, or swearing, they'll tell the truth, the whole truth, nothing but the truth. They're not doing that. But they are saying that 3-month Treasury bills are going to stay at 0 to, they're not going to raise rates until the year 2023. And here's what I'm going to say to the Fed. Wrong. Bull. Beep. And I'm going to tell you this. They're going to raise rates this year. They're going to have no choice. And they're the biggest idiots in the world if they think that inflation's going to run out of control like it is now. Okay? Because once the economy starts to sneeze, they're going to start throwing stimulus at it. You know that. We are not allowed to have a recession anymore. We'll have a recession at some point, but it's going to be such a recession, no one will survive it because the Fed has coddled us to death. Oh no, job claims, jobs aren't up. We better stimulate, we better throw a bunch of money out there. That's not how it works, guys. That's not how it works. 5 years, now this is interesting. This also rallied quite a bit. So the shorter end of the curve rallied, while the longer end of the curve did not. Here's the 10s, and here's the 30s. Okay, now what does that mean? It means the yield curve is what's called flattening. Now there's a term called the yield curve term structure. Normally, a 3-month bill is priced at less than a 30-year bond because you have the risk of time, a default, things happening, inflation, blah, blah, blah. When you have a flat yield curve, you have the 3-month bill equal to the 30-year bond. When you have an inverted curve, the 3-month bill might actually be higher than the 30-year bond. So in this case, what's happening is, I'm going to move the 30-year over here, but we're flattening. The 5s and the 3-month bills are going up, and the ones farther out are going down. And usually curves flatten in front of a recession. Now, I don't know, that is really hard to gauge and quantify because you don't know how much produces how much, how soon. Okay, so we're all good. And now going on to the bank index, here's another sign of flattening of the yield curve. Remember I said that long rates will help the banks because they borrow short, like from the Fed at 0, and lend long. So if they're getting 3 and 5 and 6 and borrowing at 0, they're getting a hell of a margin. Well, now they're not getting a hell of a margin. They're actually now, it's going to probably pretty soon cost them to borrow money, and they're not going to get as much for it. So, this does not help the banks either. The broker-dealer index, finally, I thought this thing was never going to die. It was like, what it reminded me of? It reminded me of a smoke alarm. You know how you have a smoke alarm and you can yank all the batteries out of it and the wires and all that stuff? You can smash it with a hammer, boom, 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 throw it outside, run a car over it, and it still goes beep, 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 beep. That's what the broker-dealer reminded me of. It never went down, no matter what. Well, guess what? Today it did. The last day I expect it, the first day I get it. Who would have thunk it? Airline index, kind of hanging in there pretty well considering. I think there's some pent up demand maybe, but they're still losing. They're bleeding to death. So, this thing is just, a lot of what investor psychology incorporates is what's going on recently. So if things are getting better, that means higher prices. Well, they might be getting better, but they might not be getting better enough or fast enough. So Amazon, or as I call it, Nazan, that's my new name for it, Nazan, you'll see that in the upper left. Amazon might break out. I thought I was going to break down, but this is one of the reasons the NASDAQ doesn't look that bad. I mean, interest rates are coming down. I don't know for how long, but they're using that to just drive them higher. And here's one right here. Breaks out above 35.50 and off to the races we go. I have no idea. There's nothing above it. It's clear sailing. Facebook, the guardian of decency, where scammers are welcome. We've talked about that and how WhatsApp is the breeding ground of scammers, Mark Zuckerberg, and your QR codes, Mark Zuckerberg, and your Facebook jail, Mark Zuckerberg, and your censorship, Mark Zuckerberg. I will not rest easy until you go to The Hague and answer for your crimes. But until then, congratulations being a trillionaire with all that blood money dripping from your hands. All right, NVIDIA has now become the darling of the semiconductors. They make cryptocurrency, chips, and they make gaming chips. So this one, it is now worth almost $500 million. This thing was worth like $100 billion a year and a half ago. It's now $500 billion. It keeps going up. They keep making chips, and there's a shortage of them. And I don't know. I keep having chips all over the place, and if I want a chip at any time, I have one right here. See? Ooh, delicious. All right. Now, FedEx, we have that on here because it transports goods around. And what it does, FedEx is a logistics solver. They have higher margins right now because it's so hard to get things from point A to point B. It's so hard to get things to port, get things from port, from anywhere. So this is one we put in there because it's very correlated to the economy, and it does show a little bit of that A pattern I mentioned. Okay, not a lot. This shows a little bit more of it. This is this used to be called UPS. I now refer to it as PS, for short. Hey, how's my PS guy today? Did you get the package delivered on time? That's what you're supposed to say when you're really hip and cool like me. Because if I was a woman, that'd be all over me, especially wearing this. You got it. Come on, you got it, man. All right. Anyway, this is UPS and another kind of an A thing. JetBlue Airlines, Airways, just to show you, even one of the better run, lower cost, not doing well. Caterpillar, infrastructure company, not doing well. Dow Holdings, infrastructure company, not doing well. 3M, infrastructure company, not doing well. Have you noticed here that all of these companies, these are the ones that should benefit the most, and they're now starting to fall apart. So, and Goldman Sachs, we know that always does well, not doing well. Home Depot, not doing well. Again, another type of an A top, it looks like. They might have got those great inventory profits, but if they did, they lost them. They should have sold that lumber when they could have. CVS Health, another retailer, and I'm showing a lot of retailers here because they are 70% of the economy. Although I kind of find that hard to understand when you don't have enough things to buy. You have the dollars, but you don't have the goods. So I don't know what that does to GDP. But anyway, CVS Health, took a big shot up there and shot right down. Another A-type top. I don't believe there is such a thing. I think that we're going to see some backing and filling, but we'll see. Nordstrom's, this one has been in a long rounded top for a long time. 6 months, and it's just broken down. So there's another hit at retail. Target, here's one that never breaks down. I don't know why. They're doing something right, because I'll tell you, this thing keeps going up and it's barely come back with the marketplace. So I want to show you that not everything is behaving exactly the same way. Walmart, well, that's not behaving too well either. I was actually supposed to make new annotations on here, but Walmart looks like it's curling over, and I'd say that when you have the second largest retailer, Walmart, and the first largest retailer, Amazon, well, Amazon looks like it's breaking up, Walmart breaking down. I just don't know. It could easily be that we are in this online economy lockdown, and things are going to be locked down again, are going to do well again. I just don't know. And last but not least, home builders. These guys are finally starting to come down with the overinflated lumber and the overinflated copper. Uh, there's just not enough money without stimulus tax to get, and those are not enough to buy homes anyway. So, I want to show you just before we go a couple. Look at that beautiful hood coin right there, and we've got some like custom items like this beautiful belt buckle. I mean, look at that. What's that? I think I hear somebody chasing me. Well, fortunately, I'm going to disappear, but we're going to see you next week. Have a great one. Please like and subscribe.